Hey guys, it's Astro with another market update. We're going to take a look at the markets, what's going on with news this week. We've got a big week ahead with the Trump tariffs. So let's jump into it. First, we're going to look at some news. And basically here, a couple of things I want to go over. First being just where we're sitting with Google Trends in terms of crypto. The blue line marks search volume on Bitcoin, and the red marks crypto. So you can see basically since that all-time high back on in November, actually just before that, we've been starting to put in those lower lows, lower highs all the way down. We're almost back to where we were in October, just before our run up into the election and after the election. So possibly a sign of a bottom being in very close. You can see when we put in the bottom in August, we got a quick surge in search volume on August 4th, and then it just fell back off before we actually put in our Bitcoin low and continued higher. So that's the Google trends. And then next up, we have got the fear and greed. So it's actually good to see some fear sticking around in the markets. We're currently sitting at a 32 on the fear and greed. Last month was a 16. And I wouldn't be surprised this week if we mark down into the 20s or back into the teens with the Trump tariffs coming on April 2nd. And we looked at this last week. Just something I like to keep an eye on is the daily exchange volume, continuing to put in lower lows, where if we look at the month or year to date, we are at an all-time low for the year in terms of exchange. So a sign that people have left the market. I mentioned this last week, but we want to keep an eye on this because this also does help determine a bottom. When the market clears out, that tends to be when we see a reversal. So you can see 31 billion there on November. So back to August low, the 9th or September. So around this time here, August, September, we were hovering around the 28 billion, yeah. And right now we're sitting at that 31. So very close in terms of where we were. And this was a painful time from March right into August, and we're facing something very similar now. Another good thing to point out is you can see that where we were at our all-time high here, which was this peak here was on the 18th, around the 18th of November. Following that, we then had a peak on the start of December on the 7th, but Bitcoin actually peaked in, if I'm correct in this, it was January. So that's a sign actually for a top. So as prices climb higher, you want to be seeing volume increase with that price. Otherwise, the chances are it's just a quick move up to then come back down, creating something like a double top, which we've seen on Bitcoin. And we've seen that last cycle. If you go back and look, that first peak, there was a lot of volume. Then we had that big correction mid-cycle. The second peak, that run up into the second peak, was a much less volume. So if you had been following that, you would have had a better idea that maybe we're not going to push to high all-time highs or go into a full uptrend. Because really last cycle, that second attempt at the high was just an SFP. So yeah, keeping an eye on this. Another metric we want to look at is obviously liquidations. I mentioned last week how it had kind of dropped off, and that I was expecting a big move in one direction. My bias was up, and we did get that move to quickly reverse back. You can see that it was actually more longs got liquidated than shorts. One thing I do want to talk about is basically last month we've had this correction Obviously across the markets, stock market, crypto, big correction, and it stems from obviously the uncertainty in the markets right now. And with that uncertainty, the markets start to price in, the thought of a recession. We seen that recession Google Trends searches had peaked last month in correlation with the correction we've seen in the stock market and crypto. But that's still kind of a lingering concern across markets. But with the PCE data and some of the data we're getting out now and these adjustments we're seeing, there is a concern for stagflation, which for crypto and the stock market would probably be a lot worse long term, because basically I've got an image here to go through. With stagflation, you have that weaker GDP, weaker economy, but at the same time you've got inflation, and with the weaker economy, corporation earnings are going to be dropping, unemployment rates are going to be increasing, and it's basically up to the Fed to do their best to navigate this and get this under control. And the first thing that they tend to tackle is going to be the inflation. So to me, it makes sense that they attempted to pivot in September, which helped with their rally. And then going into Trump's inauguration, they basically paused, suggested maybe only 2 rate cuts for 2025. And now with the more data that we're seeing, this all makes sense that why they would hold rates. Because if they want to get their inflation under control, basically they need to attack one thing at a time. So they'll attack the inflation by leaving interest rates or even increasing the interest rates if need be, to kill the inflation. But in doing that, that tends to be the thing that kickstarts a recession. So if that's what we're looking at, the markets would be down for longer. We would probably stay in this bearish price action until we see interest rates drop. So just something to be on your radar, but we're going to look at the charts now. Okay, so first up, looking at Bitcoin, you can see we're still in this downtrend. We did have a nice rally throughout the week, trying to break that 90K, but we ran into resistance at 88 and rejected pretty hard over the last few days. And as we were rallying, what we really needed to see was kind of a break over 93K with a couple of days consolidating or holding above that area to kind of build some confidence back in the markets. As we didn't get that, we are heading back down now. And like we've talked about with the fundamentals are really at play here. And the markets are pretty fragile. So any bad news, tends to just nuke us. So although I've marked an Elliott wave here, I mentioned this last week, this by no means has to be the end of 5 to mark the low. Would not be surprised if we get that last push down. I would like us, for me to be confident in the markets, I would like us to hold this area, so back from the March high. And obviously this is a very macro view of it, but looking on a macro time frame, this chart doesn't look that bad. Yes, we are trending down, and yes, we are trying to find a bottom, but structurally, if we were to reverse anywhere within this 74 to 78 range, it would be extremely bullish. And long term, markets have to expand and then contract, and this has been a good contraction. Bitcoin from the all-time high is down, buying on about 30%. So this nice cooling off allows people to start accumulating again, and that's what allows us to push higher. So what I'm looking out for this week is obviously probably going to sit on my hands, not do too much trading, just because the current market's so influenced by news, and we just don't know what's coming with Trump. So a few areas I do have marked out is obviously the March high. We got a little demand zone here. So I think, we've already tapped into that once and we had a nice push away. We might get a deeper tap in, maybe even to the bottom. I think you could tick along off the bottom. If, this week ends up being better than expected, you personally, you could attempt a long off the 79k area, and this could mark the low at 76. Then that could mark our higher low, and this could be the start of a new wave forming. But again, that is a riskier long, just because your invalidation on this is going to be, well, I guess your invalidation could be just under 76 here. But then you're probably going to want to also look at ticking along here. So depending if you want to take a very light position here, you can have your invalidation, as a daily close under the March high. So you might want to DCA in at around that 74, 75k mark. But at least you're taking entry here, that if it was to continue up, but you are going to have to swallow some drawdowns. So personally, if I was taking a trade this wide, it would be a swing. There's no point scalping because a trade with a DCA that wide, because the risk reward is just not there. But something like this would be like a 6.2R. And what I would probably do is only enter at the 79k area with 30% of capital, maybe even 20%, just because this is quite a big drawdown you would have to take. And then if you took your other 80% at this level, you'd really pull your average down quite close to the 75k mark, which would increase your risk reward at that point if you had an average here at around 75.8, and you were to hold on to this, provide the markets do turn around, but your invalidation is right there. So, if we start getting the daily closes under the March high, I wouldn't feel as confident in the market myself. So I do think we get a strong bounce if we do actually tap into that high. But looking at some other markets, I mentioned stagflation, and just a bit of a macro analysis here on the S&P 500. The returns from the stock market from this point on were actually, the stock market was non-profitable for the most part for 13 years. And now anybody that's new to investing, that hasn't looked back on this, probably just remembers, from 2008 crash, it's basically been up only from that point on. And don't get me wrong, like every crash the S&P 500 has had, it has recovered. But this one from 2000 took 13 years roughly to recover. So that was from around April 2000 to April 2013 until it actually broke that high. And then from that point on, it's been up only. So, in one sense, it is due to contract. We've had a few little quick blips along the way. We had a correction here, and then news event. COVID took us down to break that low, but it ended up just being an SFP, and then we pushed higher. So, we could be performance going into all the economic and the fundamentals that we're heading into, and there's a lot of stuff still to come. We could be heading into a scenario that looks something like this, where we put in that low in August, and we might get, black swan event that could really drop us quite aggressively down to see a quick recovery. We might, there's a chance this could wick down into these areas, the 618. I've got my VWAP here anchored off the COVID low, and basically wick down close it back above the trend line would be super bullish on the weekly or monthly even, and then we could continue pushing higher. So just got that August low marked out, got the trend line marked out. Would imagine we get a reaction off the trend line, which would be an SFP as well. So that is S&P 500. Dollar dominance, looking from the daily. We had this Elliott wave here, which we talked about last week. Starting down here, continuing up, 4, 5. And now I mentioned that after a complete Elliott wave, you're going to have this push down for your A, B, C correction, which would look something like this. Okay, heading down there. For me, I think this is where I think, if we get a push up near to a double top, I think the risk reward on taking along on something like Bitcoin is really good, because your invalidation is obviously a close above. Even if you want to look at this chart and compare it to Bitcoin, you could actually use this chart to take your long when you see this run into resistance. But yeah, that's my view on the market this week. Big week ahead. My suggestion is don't get too overexposed, don't over leverage yourself, and just stay safe out there. I'll see you in the next one.